Hello, everybody. You're welcome to today live streaming on the topic Forex Mastery. Please, there's something you have to do for me. If you're just entering, you're joining the live stream, you can just chat us up. This will help me to know people that are in the live stream. Okay, let's go into the business today. My name is Asugwa Happiness. I've been trading for the past 7 years. I started trading 2017. Although I had my ups and downs, and at a point in time, I wanted to give up. But as a Nigerian, I discovered that the only way to get financial freedom for me is through trading. So I continued until I discovered a winning strategy, which I personally call negative candlestick strategy. So you are highly welcome. Please, if you find this Forex Mastery video insightful, valuable, helpful, don't hesitate to like, share, and subscribe to this channel, because I will be doing what? Every day I'll be giving you the insider tips to grow that your account. I will analyze the markets and I will show you where you have to place your stop loss, and we are going to calculate what we will risk. So you're highly welcome to today's live stream. Now, in the course of in my community, my Telegram group, the VIP group, one of my students asked me to give a review on the trade we took. Most of them, they made money for those that took it. So before we jump into today's discussion, let me run a review on gold. This is the gold. Now, the way it is, in every trade you want to take, like this trade, let me just go straight to the time frame we use in taking this trade. Now, this was the area we took the trade. Okay, I'm coming. Most people, when I gave the analysis, this is the support zone, and I said something. I said, excuse me, let me just fix in my hello. Okay, so why I'm trying to get in my annotation too. You can hear me. So trading can be made simple. Although we know that trading is difficult, yes, it's complex, but it can be made simple. It all depends on, one, where you learn this skill from. Two, how committed are you in this journey of yours? So these are the things you will want to consider when when taking your trade. Okay, now this is it. Like as I said before, this was the level, and at the point in time that when the trade, before the trade came up, I told, okay, let me just use this. So, okay, this was the area the market moved before it did what? It came down. Now, I'm going to put an indicator on this chart so that it will help most of us to really understand based on those people that are indicator traders. Now, okay, let me just fix in the indicator so that I will fix in the moving average. Moving average. Okay, simple moving average. Just use the normal parameter that is there. Okay, here's the moving average. Now, I said something that whenever the moving average is above the candlestick, you have to do what you have to say. If the moving average is below the candlestick, you have to do what? I mean, if the moving average is below the candlestick, you have to buy. So immediately we saw this pattern, this move. Immediately we saw this move, excuse me. Okay. Immediately we saw this particular move, or it should get highlighted. So immediately we saw this move, we decided to buy. We bought, and it played out the way we really wanted it. Okay, so this is not what I wanted. Okay, let me see. Oh, excuse me. I wanted something like this. Let me see if this is what I want. Okay, yes, this is what I really want. Okay, now from here, it's discovered that the candlestick are above the moving average, and the market created what? It created higher high here, higher high, higher high, and then there was a retracement. So this is the higher low, higher low. So immediately it gave it that first higher high, and there's a pullback. The pullback couldn't break this previous low. That tells you that you have to buy, and you bought. For those of us that bought, we bought around there, and this was where our stop loss lied. And the market gave this first high or second high, and it was a pullback before it gave this third high. To tell you that this move is an uptrend move. So in trading, the insider tips you need to pick from here is to identify the trend of the market. Once you are able to identify the trend of the market, the issue of trading becomes easy for you. But if you are not able to pick the trend, then it becomes very difficult to take your trade. So the first tip is to understand the trend. Please, if you don't really understand, write in the comment section. I want you to do what? Just comment trend. Just comment trend. How do I identify trend? Okay, now let's move on. From here, we discover that this is high. This one high. Again, this is a high. There's another high. As long as this high could not beat this high, what happened? The trend still remain on a downtrend. So what do we now do? We are going to wait for a pullback here. A pullback here to see if it can break this downtrend. If it cannot break this downtrend, then you know that you're having what is called a lower high. That means it's going to come down. But the move down, as long as it cannot beat this our support zone, that means the markets still fall within this range. Hope that is clear. If you have getting value from this analysis, this explanation, please, I want you to comment, I'm getting value from it. This will always motivate me to always do what? Give you more on the insider tips to grow your account. So looking at this pair, the question is for those of my students, and I asked them, I should give you a review. Now the question is, you can see what is happening here. This is the support. So peradventure, the market is going to move to the upside. As long as it cannot, whatever that makes it to beat this moving average, that tells you that it's on an uptrend. Okay, fine and good. Now, we do a proper analysis. I said the first thing you need to do when you open your chart, your trading platform, is to look at the big picture of the market, the behavior of the market. And how can you get the big picture? Is by running a top-down analysis. First insider tips is to get the trend. Second is to run top-down analysis. Now, I want to do the top-down analysis for you. Top-down analysis means taking your analysis from the month for the higher time frame to a lower time frame, and then trying to picture the trend that is dominating. Every market, every instrument has one particular trend that is operating on at a particular time. It might be in an uptrend, downtrend, or sideways, which is also called range. So for this particular gold, we are going to look at the month. Let's run analysis on the month to look at what is happening there. On the month here, on the month, sorry, I've not been, sorry. Okay, I've not been showing what I was doing. I'm sorry for that. So I will be sorry. Let me get Okay, sorry, I was showing a wrong chart instead of the MT5. I was showing this was the chart we were seeing. This we are not seeing this one. So now I've really changed back to the chart. Hope you can see the chart now. Okay. Okay, so let's move on. Now, right on this particular chart, this is our monthly time frame. This is the monthly time frame. Now, on the monthly time frame, the first thing you need to like pick at is the trend. What is happening on this time frame? I said something that for you to trade moving average, you need to understand something. If this candlestick are above the moving average, you know it's an uptrend. If the candlestick are below, you know it's a downtrend. If the moving average are within, you know it's what? It's a range sideways market. Okay, based on that, you agree with me that the market now is on an uptrend. So I'm going to use my trend line to indicate it. This is the uptrend. This is the uptrend. It created what? Higher high. It created higher high. From there, you can see higher high, higher high, higher high. They are equal here. Equal here. Higher high. Also create another higher high here. Now, look at what really happened here. Yes, this is where most people, most at time, look at what happened here. At this place. This particular move is a higher high, but here, the down of it, this is a high, and this is what? Our low. But it's discovered that the market broke this place, gave us low. It became as if you want to give us a lower low instead of a higher low. You get that? Instead of higher low, because in an uptrend you should have higher high and higher low. But here now it gave you a lower low compared to this level. So this is where most people will be taken out. So with that idea now, we've already known that this is an uptrend because it's giving us what? Series of higher high and higher low. That's that. Series of higher high and higher low. So the next thing you will ask yourself, you've been able to like picture out what's really happening on the market. The next thing you will ask yourself is what is happening at the lower time frame. That is where this top-down analysis comes in. So that will not make us to go straight to a lower time frame. A lower time frame. You can see still the trend is uptrend. Okay, let me off my jet. Just give me some time. Okay, so I'm back. So from here now, we can then see that on this particular time frame, which is the weekly time frame, is also on an uptrend move. With your trend line, and with your moving average, you've been able to like identify it. You've been able to identify it. That this is an uptrend. So now you move straight to a lower time frame again, which is daily time frame. Daily time frame. Let's see. We'll explain. Okay, now this is your daily time frame. This is where the issue comes in. If you notice something here, is that different? If I should bring in my trend line and try to get, you can see that there's a break of that trend line. There's a break of that trend line. There's a break of the trend line. It's a break of it. Okay. Now we are going to get a confluence here. That is, you combine the trend line, what is happening with the trend line, and the moving average. The moving average, when the candlestick are above it, we say we are going to do what? We are going to buy. That tells us that we are doing what? We are on an uptrend. But once the moving average are above the candlestick, that means sell. We have to sell. So looking at this now, on this daily time frame, the trend has changed. But on weekly, the trend still remain what? Weekly. On weekly time frame, the trend remain an uptrend, because you can see the moving average is below the candlestick. The moving average is below the candlestick. So the uptrend is still intact. And the moving average is pointing upward. Once the tip of the moving average is pointing upward, you know that it's still on an uptrend. But if it's pointing downward, you will know that it's on a downtrend. So there are two things you will consider. One, the tip of the moving average, is it pointing upward? If it's pointing upward, you know it's an uptrend. Two, is the candlestick above the moving average? If it's above the moving average, you know it's an uptrend. But if it's pointing downward and the candlestick are below it, you know it's what? It's a downtrend. So now let's head straight to the daily. You can see the daily. The daily, this is our daily. And you can see the moving average pointing downward. Then this is also pointing what? The moving average are below the candlestick. Sorry, the candlestick are below the moving average. So the question now is, how do I now trade it? Are you going to buy or are you going to sell? If you are going to buy, you will now go straight to weekly time frame. If you want to buy, because that is where the market said is what? Is on an uptrend, or the monthly time frame. So you can see the moving average is pointing upward. So if you are going to buy, there are two things you will not do. Once you've identified one, the time frame where the trend, the uptrend where you want to buy is, you now draw your zone there. Draw your zone here. So I've drawn my zone here. So I'm expecting the market to come closer. Let it come closer to this zone so that I can buy there. So that is what I will not do. Or I will not go straight to the monthly time frame. Monthly time frame, and then do what? Draw your zone. Okay, the zone is here. I can start to like draw another zone here. That's my resistance. Then get my support here. You can see everything is within the moving average. So if the market breaks here, I will aim here to buy. But let's assume I want to sell. Okay. In trading, both action make money. If you are buying, you make money. If you are selling, you make money. But the difference is, where are you going to buy? Both buyer and seller will not take their action at the same exchange rate. But each participant will take his or her own action at a particular position. So that is the way the market is going to look like. So now the question is, where am I going to buy or where am I going to sell? So for those of us that want to buy, we'll be waiting at this level or this level. You've seen the level I've drawn, you've seen the moving average. So for those of us that want to do what? That want to sell, we'll now move down to a lower time frame. You can see the daily. This daily has shown us that the market is on a down trend because it's giving us series of what? Lower high and lower low. So this is just the first leg. Yeah, the first leg. So now we'll now move on to a lower time frame again. What we are doing is top-down analysis. Top-down analysis. Okay, I believe here is clearer. I see it's getting clearer here. The moving average, you can see it's getting clearer. So now we've already gotten our what? Our support. So we need to like, there's a deception here, but that shouldn't move you. Right here, the moving average is within the candlestick. It's within the candlestick. Yeah, it's within the candlestick. So once the moving average is within the candlestick, that tells us that it's a range market. You can see the tips, the insider tips that I'm giving you, that most gurus, most mentors will not reveal this to you. Yeah. So now on this is what is known as a range. So you will now ask yourself, how will I not trade this range market? So looking at this place now, you can see that the candlestick now is what? Is above the moving average. These are moving average. These are moving average. It's above it. So how do we now trade this market? That's the question. You've seen your trend line. This is your trend line, which is standing as a resistance, as an obstacle. So, and you also have the moving average standing as a support. But you can see that the present candle, this present candle here, is bearish, which tells you that they are still selling. Yeah? So at that point in time, you go to a lower time frame, 1 hour. The 1 hour now. You can see here, this is a downtrend. A downtrend. But this support level is strong. Market is finding it difficult to break it. Now, the moving average is above the candlestick. So you are waiting. If you buy here, if you sell here, if you sell at this point, just know that you are looking for a way to do what? Put your stop loss above the moving average. That is where you will now calculate if that is what you can risk or not. Please, if you can still hear me, I want you to stay on the chat box. Just comment, I can still hear you, so that I will always monitor my audio with your comment, because I just did some little tweaks on my software, and I discovered that at least the audio is better than the first day we started, and the streaming. So please, if you can hear me, you can still comment, I can hear you. Okay, now, okay, thank you. So now let's move on. Now, from here, you can see that it's struggling. The next lower time frame we are going to check is the 30 minutes. The 30 minutes. Okay, fine and good. This is an uptrend here. Let me get rid of this my annotation. Yeah, this is the move, uptrend. Uptrend here, a downtrend here. But what happened on the moving average? You see why the moving average, the indicators are not the right tools to use. The best tools that I can use to trade is the price action. And not just price action, to master a strategy that has made trading to be as simple as ABC. And that strategy is called negative candlestick strategy. So if you are interested to learn more about how to trade like a professional, I just check the link below and you get in touch with me. Okay, now let's move on. Now you see here that this is an uptrend, this is a downtrend. This was the support we drew. Now if you want to trade here now, you need to ask yourself that question. What will I do? This is 30 minutes. If you want to trade, you can still go to a lower time frame. Don't allow anybody to deceive you. The professionals are there. Go straight to a lower time frame. Now, here, the market type we have at this point is a range market. And when you want to trade a range market, you buy at the support, you sell at the resistance until either the resistance is broken to the upside before you change to the upside or the downside. That is when you now change your tactics. But if the market still remains a sideways market, a ranging market, That is what you are to do. How do you know a ranging market? With your moving average, you can see that the candlestick are within the moving average. They are within the moving average. So since they are within the moving average, that tells you is what? Is a range market. But the situation whereby the candlestick are below. Once they are below, let me show you. Okay, clear. Okay, they are below. This is a downtrend. Okay, here they are above. This is an uptrend. So while from here, you can also take here to be like a range. You can also take here to be like a range until it gives you that break. But there's a better way you can trade the market without you looking at the indicator. There's a better way, and that is where the education comes in. So from here, we stopped at 30 minutes. You can go as low as 5 minutes. As low as 5 minutes. Let me see if that support that I drew, you can see the support. You can see that the market is finding very difficult to beat this touch. This touch 1, touch 2. Okay, this is the first touch. The first touch. Second touch. Okay, I'm saying this is the third touch. Fourth touch. Then fifth. You get that? So here now, you will ask yourself, since the market has not been able to do what? Come close to this place. You will now calculate, what do I need to do? If I'm going to buy here, I want to put my stop loss here. But if you cannot sell here. If you sell here, you're looking at putting your stop loss above, and your risk will be high. So you calculate until there's a break of structure. So let's check if we can see. Let's see what is happening at the 1 minute, because we've checked that of 5 minutes. So let's see what. Okay, now on the 1 minute, you agree with me that what is happening now is a range market. It's a range market. Why? Because the moving average is within it. But that's not it. Now there's another trick again you can use to know what is happening. Now you notice that this is a downtrend. This is a downtrend, quite right. What is happening here? I want you to take note of something. It's what happened here. Okay, let me explain it. Okay? Now you notice something. The market is on an uptrend here. Give you higher high, higher and then higher low. Higher low. But immediately it got to this place, it came up. That higher high that it created around this place, it didn't create it here. So the market could not beat this place, could not beat this one to the upside. Immediately you notice that, just know that trend want to change. It came down again, it gave you what? Lower low. That is, compare this place, compare here and here. It's now a lower low. The market came up. This place now could not be this place. That tells you that a trend wants to start. Immediately it broke that range. This is the range. This is the area that was range. It broke it here. So immediately you see that break of that range, you know that that trend has started. Now look at what is happening here again, which we are looking at an uptrend want to start. It came up, it couldn't break here, it came down, and it came down, it didn't go below this place. It's now moving zigzag, sideways. So that tells you that an uptrend wants to start. So for those of us who are scalpers, you can scalp from here. For those of us who are scalper, because you've already seen that, yeah, the general trend is an uptrend, but on daily time frame, the trend there is a downtrend. So if you just trend uptrend here, with what is happening at the daily time frame might take you out. So you're only going to scalp here. So that is the way I see the market. So I don't know whether we have any question or contribution. You can just send it now on the chat, so that before I end this live stream, I want to see if I can go through them and then do a finishing touch on it now, because I have a few minutes to go. Although on live stream on YouTube, our time is not limited. Unlike the Google Meet. The Google Meet, we have few time. But for YouTube, it's not limited. So if you have any question to ask, you can send it on the chat box, so that I can just do justice to it now. So for those of us who will be watching this live stream, please like and share, subscribe to this channel, because I know this content that I will be posting will be of great help to many traders out there. Be it a beginner, be it a professional, it's going to help a lot of traders out there. So while I'm waiting for any question and answer session, I just want to run through the TradingView platform. Now, for the TradingView platform, I'm looking at what they call it, volatility 25 index. Although the TradingView platform for Derive has limited time frame. The highest time frame for this particular one is just the daily time frame. But if we are to check out the, let me see if I can check out the, okay, TradingView. Okay, why it's loading? Okay. Why that is loading? I want to so that I'll see the difference. Why that is loading? Let me just type in the view. Okay. Why that is loading? Let me just want to run through it. Okay. So you're so done. So a recap: for us to succeed as trader, the insider tips to grow your account are: 1, before you take any trade, run your analysis from higher time frame to lower time frame, so that you can get the big picture. That's number 1. Then number 2, when you run the analysis from the higher time frame to lower time frame, you have to do what? Note the trend on each time frame. Note the trend on each time frame. The monthly, if it's uptrend, note it. The weekly, if it's downtrend, note it. Now, once you've been able to gather the trend, the third insider tip that I need to understand is the higher time frame trend controls the lower time frame trend. So once you've been able to establish that, the fourth insider tip you need to put into consideration is ask yourself this crucial question: which type of trader am I? Every trader make money. Don't allow anybody to deceive you. If you're a scalper, you make money in the forex market. If you're a swing trader, you make money in the forex market. If you're a position trader, which is a long-time trader, you make money in the forex market. In as much you know what you are doing. It's only when you don't know what you are doing, that is when you will not be able to make money in the forex market. So you ask yourself that question. For now, is it that I want to scalp? Or is it that I want to swing trade? Or is it that I want to go on what? Position trading. So if you're able to answer that question, the next thing is to do what? Fine-tune your strategy. If you are to use indicator, master that indicator. If you are to trade based on price action, master that price action trading strategy. But make trading to be as simple as possible for you. Don't complicate issue. Yes, if smart money concept work for you, go for it. If ICT's principle work for you, concept work for you, go for it. If good strategy work for you, go for it. Don't be carried away. You can make money in the forex market. Okay? While that is loading, I want to show you a difference. It's still loading. Okay, now let's go straight to our chart. Now from here, from this place, we can see something. Okay, let me get it clearer. Okay. Now this is okay, fine. So I'll give it for. Okay, from here, this is our daily time frame. It's hanging. Let's just relax. So now you're not getting the monthly time frame. You're only having what? It's hanging. As well as. Okay. While I'm still working on that, okay. Now this is from here. This is a downtrend. If I should pick the market from here, so this is a downtrend. So you establish the fact that this is a downtrend. But the issue here is that looking at this, yes, I want to explain something. This is volatility 25 index. This volatility 25 index. That's what I want to explain here. Okay, I'll use just give me some time. Okay. So what time frame are we looking at here? Okay, fine. This is a daily time frame, 24 hour. It's 24 hours, so it's a daily time frame. Daily time frame is what we are looking at here. I just want to because most of our analysis will still be based on this. So this is the daily time frame for trading view. But this trading view is that of derived. You can see the heading here. Derived trading view. Derived trading view. So, but the general trading view has a higher time frame. So now, if this is a downtrend, and you know the reason why it's a downtrend. It's giving us 1, 2, 3, 4. I don't know what's this. Okay, 5. Now these are your lower high. Now we have lower low, lower low, lower low, then lower low. So with this, we've established that this is a downtrend. Yeah. So once we've been able to establish on this higher time frame that this is a downtrend, the next thing you have to do is to move, because the first thing you have to do once you open your chart is to run your top-down analysis, going from a higher time frame to a lower time frame. So looking at, okay, fine and good. Now on this, there's a way you calculate it, you will say it's a downtrend, and there's a way you look at it, you say it's an uptrend. Okay, now the two ways. One is a downtrend. I'm saying it's a downtrend. Downtrend. I pick it this way. I'll give you a reason. When you are trading and you don't have any reason why you are doing a particular thing, there's no need of you taking that trade. There's no need. So this is a downtrend. Why? Giving us lower high. Let me take it from here. Lower high. Lower high. Then lower high. Then lower low. Lower low. Lower low. So this gives us, it's a downtrend. But if you are to take it from this angle, you know, I said something that you have to take it from this angle. It's an uptrend. Uptrend inside a downtrend. Is an uptrend inside a downtrend. So when you are not trading for the big picture is what? A downtrend. Then the smaller picture is what? An uptrend. So the big picture controls the smaller picture. So when you are not trading the downtrend, the uptrend inside a downtrend, you have to be what? Be cautious. Somebody that entered the trade around here, and is trying to put his or her take profit here, will be taken out, because the general trend is a downtrend. So that is clear. So now we move on to the lower time frame again. Go on 8 hour, move on to 4 hour. That is the first thing you have to do. So this, you can just take it as an uptrend. I get that. But the general is a downtrend. You move on to what? 4 hour. You can see the way, this is what is an uptrend. I get that. So I might just, another person can just say, okay, this is what? A range. I say that. So it all depends on how you define the market. It's the way you define the market will not determine what action you have to take. The person I say is how look at it, is an uptrend. Might want to buy here. I get that. Or here. I get that. Or here. At the levels that such a person might want to buy. You see that? So it all depends on how you define your market, your trade. So that is the way it is in trading. So tomorrow we'll still be having more of this, because every day I'll be giving the Forex Mastery tutorial. Again, where we ask questions, again, learn from one another. I'm giving you the insider tips and tricks to grow your account. We analyze the market together. So now, this is a bonus for whosoever that will be watching this video. The bonus on this pair areas, I want to just give you straightforward. This pair, as of today, 8th November, is 2024. We have to sell. No matter what is happening, you have to sell. So the question is, where are you going to sell? That's why I'll put your indicator for you. For those of us that we are going to use the moving average, but it's moving average that I've really explained how to moving average. Let me just use moving average. And okay, it's already there. So you can see range here. You can see what is happening here. As if it's an uptrend, it's an uptrend, then this. So that's the way the market will now act. So that's the way the market is going to act. So from here, it's a downtrend. So the next place we are looking at, so like so the market has really gone far. So go straight to 15 minutes, 30 minutes, and let's see. If you should sell here, please just put your stop loss here. I don't like jumping into market. Your stop loss here, calculate, then take profits here. So that's the way. But you can see your risks is higher than reward. So except you now want to take it down. If you take it down, the market might retrace backward. Retrace backward. So you trade what you see at a point in time. Trade what you see. So for the 15 minutes, I want to see where we'll get the best fit. Take the trade. 15 minutes. Okay. Let's say 5 minutes. 10 minutes. Okay, the market has already gone far. 5 minutes. Just gone far. Okay. So let me see. Okay, this is what I'm saying. Open a chart. Product, super chart. So that you're on Forex. This trading view is just for analyzing the market. Trading view is used to analyze the market. Whatever might be your analysis, you take it to your MT4 or MT5 to place your trade, to place your order. It's only few brokers that's integrated trading view into their, who are not using trading view as their trading platform to place their trade. So, but naturally, the trading view is for us to analyze the market, and then go to your MT4 or MT5 and place your trade. This is what I'm trying to, this was what I was trying to explain. On the trading view, you can see the time frame. The time frame. You can see 12 months. 12 months. If I want to analyze, you can see this particular stock. This particular stock is on an uptrend. Let me bring out and put our, let me see if I can see go SAU where we're in a 4 and not telling us, okay, SAU. Let me see if I can see gold. USD. Okay, these are good. I want to use good as an example also. You see the bigger picture will help you to like, no, okay, this is good. That means for the 12 months, gold has been on an uptrend. So this will now help you to know how to ride the trend. I see that. With this, you can easily know that I have to go all out for buy. No matter the pullback or the retracement, you are doing what? You are buying. But buying does not mean that you just place. This is not crypto. It's not crypto where you buy. Most of us will just invest and forget it. No. Forex is, you have to time it. So now, go straight to, we'll be trading together. Okay? Because I'll be documenting my trade too. Okay, this, you can see a big difference when you are using a trading view to analyze. 3 minutes. Wow. It's still on an uptrend for 3 months. I said 3 minutes. Don't mind. It's not 3 minutes. So that's 3 months. This is 3 months. The buyer are really on it. So the buyer on it, seriously. Just hold down. The system is just slow. Okay. Hold on. Oh, so like what I was saying, okay, that's for the 3 months. Now for the 1 month, you can see now the 1 month the seller has entered, but that does not mean that is the trend. Okay, I can decide it's okay. Based on this, let me put my, okay, my results, okay. The market might come closer to this area. I come closer to that area, or I put another, this horizontal line, I'm taking it as my support. I'm taking it as my support. So now move on to 1 week. I see the seller on it on the 1 week, but that does not mean that is the big picture. No, you can say it now. So you can wait for the market here and let's see what's going to happen, or Let's then or wait for the market. Yeah. So now I can level it well. So let's see what's going to happen there. So that's how you will now do what? Take your time to analyze. Once you are done with placing your value, you go straight to your MT5 or MT4. Yes, and then you draw your line there the way you've drawn it here, and then wait to get a confirmation before you can then do what? Take your trade. So that is the way it is. That is how you use you will now use your, what they call it, you will now use your moving average. Okay. I will do that. What is there that on the trading, before we place trade, we are going to go straight to our trading journal. It's Forex Mastery. It's a free whatever, but for most of this topic, for a start, maybe you should talk about documentation of our trade. This is trading journal, other stuff, etc. No problem. We're going to do that. We're going to do that so that at least and they will learn a lot. I'm going to do that because now, as I'm doing the analysis, I'm documenting it. Okay, let me just see. I'm not sure if I'm able to get my trading journal so that if I cannot get my trading journal online, because everything is online. Everything is online. If I cannot get it online, that means okay, fine and good. Now next class, I will see what I'm going to do. So I believe we've done something today. For those of you that did not an opportunity to like watch us live, you are seeing the video, YouTube just showed you the video. Please like, share, and subscribe to this channel. And another thing again, hit the notification bell so that as I post new video, there's some video I will like this. I will not edit it. I'll just leave it the way it is. And I believe you are going to learn a lot from it. Let me see if I can get the listing. I'm trying to like see if I can get the trading journal so that I will show you people. Show you people. Trading journal. I get it. Okay. Is it on document? Oh, my system will soon that's giving me sign. Okay, don't worry. Okay,